Have you ever wondered how banks make money? Most people think banks just keep your money safe. But the truth is very different. Banks are actually businesses. And like every business, their goal is to make profit. So how do they do that? Let's say you deposit $1,000 in a bank. The bank does not just keep that money inside a locker. Instead, they use your money to give loans to other people. For example, someone wants to buy a car. The bank gives them a loan with 10% interest. That means if they borrow $1,000, they must return $1,100. Now here is the interesting part. The bank gives you only maybe 2% interest on your deposit. So they pay you $20, but they earn $100 from the borrower. The difference is their profit. This system is called interest spread. And this is the main way banks make money. Now let's go deeper. Interest is just the beginning. Banks are much smarter than most people think. When you deposit money in a bank, the bank is not required to keep all of it. They only keep a small percentage as reserve. The rest of the money can be loaned out again. This system is called fractional reserve banking. For example, if 10 people deposit $1,000 each, the bank now has $10,000. But they might keep only $2,000 as reserve and loan out $8,000. Now imagine they charge 8 to 12% interest on those loans. That creates serious income. But that's not all. Banks also make huge money from credit cards. When people miss payments, interest rates can go very high. Sometimes 18%, sometimes even 25%, and millions of people carry credit card debt. Now think about the profit. Banks also charge business clients. If a company wants to expand, they take big loans, sometimes millions of dollars. Even a small percentage of interest means massive profit for the bank. Banks also invest in safe government bonds. These bonds pay steady returns. Low risk, steady income. Some banks even invest in stocks and financial markets. They also provide wealth management services for rich clients. They manage investments, retirement plans, and assets. And of course, they charge service fees. Another big income source is transaction fees. Every time you swipe your debit or credit card, a small fee is charged to the merchant. You don't see it, but businesses pay it. And when millions of transactions happen daily, that small fee becomes huge money. So in reality, banks earn from interest on loans, credit card charges, business financing, investment returns, service fees, transaction fees. That's why banks are some of the most profitable businesses in the world. Now you understand. Banks don't just store money. They use money to create more money. And that is how the banking system works. If you found this helpful, subscribe for more simple financial knowledge.